So rates are super low, right? We hear about these 2% rates, even though it's 1.99. What do you need to do? How can you prepare yourself to get the lowest rate? How do you get the lowest rate? I'm Garrett Wordmuller. I'm an independent mortgage broker in California with Fresh Home Loan Inc., Best Equity Property Services. And here are some tips out there that I'm just going to tell you straight up is what I'm seeing. As a broker, we kind of see it. So number one, when you're applying for your loan and through the process, you need to be a little bit more patient just because as an industry, we're set to do about 3 times the volume we did in 2019. And 2019 was a pretty good year. We don't have additional staff, right, to handle all this extra capacity or extra volume. So there are capacity issues with several lenders out there. And keep in mind too, a lot of these underwriters, processors, doc drawers, all these people, closers, they're working from home. So that too can cause delays. So understand that. I understand the national average, however, I will say is around 45 to 60 days. And we're definitely closing 95% of our deals in 30 or less. And if they're extended, they're usually pretty challenging. So that's definitely something to look out for. One thing that's good about using a broker is we can navigate. I know these people have, 4-day underwriting while I was there at like 3 weeks. I'm not going over here because it just causes problems in the transaction. 45 days in, if we're still trying to close a refinance, everyone's just done by that point. So we definitely as a team try to avoid that. And we have the resources to get you to the closing line as fast as possible. Number 2, be prepared. And what I mean by this is, let's talk about income first. As far as income goes, we will need to verify employment up until the time we fund your loan due to unemployment issues, right, and the pandemic. So with that said, usually W-2 people, we're just slamming through very, very quickly. So if you're W-2'd, you're in a pretty good spot. I'd say though with self-employed, we're getting those done too, but there are a lot of additional steps. Sometimes we need to go through the IRS ourselves because they're not very responsive in getting tax transcripts and different things. So just be prepared to show a little more. There could be a couple things at the end where we need a pay stub, need to make a phone call to verify employment and your HR is closed, different things like that. So let's be prepared and handle it. If you're working with my team, we kind of know what's going on now and how to navigate all this. And, a lot of times we're clear for docs, we still need a pay stub. So just be prepared for things like that. If you own a home, as far as mortgage statements go and the CARES Act and forbearance right now, we need to show that you have the current mortgage all the way up until we close your loan. So if we're closing on, the second of a month, all of a sudden we'll need to verify the payment for the previous month, and so just be prepared to show a payment history. Number 3, appraisals. So appraisals are a huge deal right now in a lot of aspects. For the most part, we are getting a lot of drive-by appraisals, property inspection waivers, et cetera, because people don't want to go into other people's homes, right? And people don't want other people in their homes. So we're doing as much as we can as an industry, I think, to get appraisals as quickly and as safe as possible. That being said, it seems like there is a major shortage of appraisers out there. And I've seen a lot of really interesting drive-by appraisals where they even appraise the wrong unit once. So things are really weird in that sector. Also, investment properties can be more expensive to appraise as they don't want, and a lot of appraisers just won't do tenant-occupied properties because the owner doesn't know what's going on in that unit. So a lot of issues with appraisals out there. For the most part, though, we're getting them done 7 to 10 days. But I have seen, unique properties and things. A lot of these guys are just so busy, they won't even deal with anything that's not just standard, single-family residence, vacant or owner-occupied. So that's what's going on with appraisals. All right, where to go to get your home loan, right? That's the big question, the tip of the day, the most important tip. Where to go? I got this cool new acronym for you. Rates time team rates with a $sign Y, because I've seen a lot of people who have started the process elsewhere. They come to me and I'm looking at what they're getting and they're like, oh yeah, it's, this 3.125, 2 point so-and-so, whatever. And I'm like, yeah, and you're paying like $19,000 to get this loan, literally. Did you know that? And so you definitely got to see, like, yeah, they're going to quote you a great rate, but are you paying an arm and a leg to get it? So I've seen differences. Even last night, I was pricing out a loan for a client, and there was a $4,000 difference between one of my lenders versus the other lender on the same loan. So you got to understand what your rates look like. What does the time frame look like? A lot of lenders will just all of a sudden get slammed. What if you're underwriting 7 days on a 21-day contract? You're going to be a little bit backed up there on a purchase. So just understand the time frame as you're going into the process. I'd say on refinances, if they tell you, oh, we're like 45 days, it's probably going to be like 60 or 75 days. I mean, it can really go out quite a bit on some of these longer, overwhelmed lenders out there, which I avoid completely, for the record. And then the team. What does the team look like that you're dealing with? If you're dealing with an internal team on the bank side, are they going to be accessible? Are they going to be available? Are they going to get back to you once the loan is approved in a timely manner to get those conditions in to make sure you are moving along the process as quickly as possible with this overcapacitated state we've talked about in this video, right? So you need to make sure you have a proper team. I'll say on the wholesale side, such as myself, I've got very experienced processors that know multiple lenders. So if we need to, shift courses due to better rates or better time, we can do that before an offer is accepted on a purchase. Should, something change with the lender or there's an issue or an overlay that they have and we need to move the loan, our team is set up to do that. So I'll say that, and then I will end with a quick little video United Wholesale Mortgage made about the difference between banks and brokers. I'm Garrick Wordmuller, and thank you for watching this video.
Some companies love to tout their low prices as a sign that they're the best in the business. But when you take a closer look, added fees, long delays, and other problems can end up costing you a lot more. The same is true for your mortgage. You can take a chance on the big banks or retail loan companies, or you can choose a local, independent mortgage broker like us. We have access to lower wholesale rates that banks and retail lenders can't match. We shop hundreds of options to match you with just the right one, and we get you to the closing table in 20 days or less. So the next time you're tempted to go with one of the cut rate options, let us put you at ease. Call today.